Hey guys, Taylor with GammaEdge here, coming at you with a post-market recap for July 21st, 2025. Last week we were out of town, but this week we were back to regular scheduled programming. With that, we're going to take 5 minutes to recap what happened in the SPX today. Right, so being gone for a week, really didn't look at the market. That's where a daily process is very helpful because it gets me up to speed quickly on what the environment of the market is and then where those key trading levels are for the day. By the market environment, what I mean by that is first we go through SPX A Full Complex, then we go through SPX P Full Complex, looking at the structure via the dashboard, looking at the GEX ratio, looking at the true delta, true gamma zeros. All of that ultimately is to get us grounded in the kind of what speculation is doing in terms of the call versus put speculators and who is winning that battle. From there, we can look at the market trend model to understand what the short and long-term trend looks like. And then finally, we can hone in on those specific levels that we want to key in on the trading day. If any of that is unfamiliar to you, GammaEdge.us/education, go to our blog site. All of these tools, all these concepts are outlined for you here within these various articles. Last plug before we get going real quick, GammaEdge FastPass, something that we launched last week. This is our entire trading methodology for you, broken down into bite-sized articles, each one with an actual takeaway. Sign up there, learn everything that we teach the paid community. Looking at SPXP Full Complex real quick, thing I want to point out here is, call dominated above and below spot price, key level in the complex 6,300. That's our key transition zone, above 6,300, constructive to the upside. But with that, getting the SPX 0DT specifically, looking at the structures, key levels on the day, we were opening right around the top of our transition zone, which was 6,300. Again, confluence with the SPX Full Complex level, which was good to see. From there, above 6,300, we were biased higher, with potential stopping points at 63, 25, just given the distribution of speculation, meaningful speculation there. And then ultimately, we thought the move today was capped at around 63.40. Right, all this was predicated on above 6,300. We would see that continued kind of call speculation step up, step into the market, help carry us forward. So going back to the price chart real quick, just seeing how things played out. Again, gapped up a little bit above 6,300, then really just, a parabolic move straight up, kind of fizzled out, not quite at 63.40, but close enough amongst friends, right? And something incredibly valuable that we saw intraday, at least that I was honing in on, was our intraday volume analysis, specifically looking at our vol M command. What we could see is that speculation, once we kind of topped at around 63.40, there was no material build to the upside in the vol M command. Generally, what you get when you see kind of a sustained move higher is as price is moving higher, you also see the call centroid side ramping higher as well, leading price higher. We definitely did not see that. That's why we tweeted multiple times today, likely seeing a cap on the market around 63.40 because A is a significant level just in terms of distribution of speculation, the SPX 0DTE complex, and then just the nature of the call speculation in the 0DT complex as well today was not expansive at all. Further looking at our market trend model on an intraday basis, what we could see is, yes, we had a little bit of a move higher here into the morning session, a little bit of filter tick buying, but then, throughout the rest of the day, it's really just a ton of stalling action right here, right there, corresponding with price action, which was sideways to lower. And then towards the afternoon, we were no longer able to get above 63.40. For whatever reason, started seeing selling coming into the market. Could be a combination of, those out money calls were limited towards zero, some potential monetization from the move higher earlier in the session, whatever it is, we saw that selling come into the market, saw a little bit of filter tick selling come into the market as well. And something I actually did was took a trade to the short side. Reason why I thought this was an easy trade is A, we knew 63.40 was a key upside level. B, vol M was flat to lower on the session, so we really weren't seeing a progressive move higher. And so with that in mind, kind of the risk to reward in my mind was to the downside. Yes, we could move a little bit higher to 63.40, but there's also the risk of kind of a monetization event because we were not seeing that speculation continue to push higher. And so that's exactly what we got. I shorted a couple times, got stopped out twice, finally caught the short up there, which proceeded to move lower once we lost VWAP, once the market trend model started moving lower, added a lot of conviction to that trade. And the goal of that was ultimately get down to the opening prints where profits were locked in. And again, we can see from the vol M command kind of a rapid decrease in the call side, which kind of suggests to us that there is monetization of those calls. And so, through that, it should be kind of clear now how we take those key levels in the key intraday volume analysis, and we can inform trades on that. So understand that we were looking at an intraday snapshot. Here's a snapshot of the vol M tool at 12:35 p.m. Eastern Standard Time. And here we can even see that, call speculation was very flat on the day. So the utility of this tool is we can understand what price, the character of price action, which is choppy, right? And then we can project out where price is likely to go. And so, yes, I understand that price did not exactly follow this. However, what we do know is that that call centroid was flat to lower throughout the rest of the session. 63.40 was a key level. So, right, that's telling us that, expecting some kind of massive move higher above 63.40 is probably not the smart decision to be making. Hence my comments earlier about if I'm looking for a directional trade at all, I want to try and look for something to the downside because there's just more room for a potential move lower, retracement to the downside relative to 63.40 expectations higher. And right at the end of the day, trading is just based on risk to reward and playing the probabilities and having a little bit of market awareness, which is what these tools help give you. And so, yeah, with that, don't have a ton else to say. Hopefully, after this video, you should understand kind of pre-market prep process in terms of from a swing trading time frame, getting comfortable with that through, SPX-A, SPX-P, full complex analysis. Again, just in the Discord server, have a massive write-up on all that. I'm not going to go through this. I trust you guys can read, so you guys can go to the Discord and read that. And then we went over 0DT in terms of how to find those specific levels and how to leverage those intraday volume tools to help kind of give you confluence between price action, key levels, and what is probable to happen. So with that, you guys have a great night. We'll talk to you tomorrow. Thanks. Bye.